Hello, I am Amanda Cassar, and welcome to Season 3 of the Financial Secrets Revealed podcast. This season, meet the experts. And when it comes to property, I believe Mr. Alex Minter of the Astute Property Network might just be an expert in this space. Welcome to the show, Alex.
G'day, Amanda. How you going?
Really well. Thanks for joining me.
Thanks for having me.
Now, it's said in this lucky country that we live in that property is the great Australian dream, and I know that's not confined to just Australia. Why do you think property or the bricks and mortar is really something that, people to aspire to have in their portfolios?
Yeah, good question. I think it's a myriad of things, but I think it really probably comes down to, I think we've got deep cultural roots for owning your own home in Australia. I think a lot of it comes down to it provides a stability and security as well for your family. So always somewhere to live. I mean, one of the necessities that humans need is shelter, right? So, but owning your own home is the ultimate there. Just coming back to sort of the cultural norms and social expectations as well. I think I see a lot of, when I say kids, I see a lot of sort of young adults these days coming out of uni and talking about buying their first home and saving for that, which I think is great, right? But I think it's almost an expectation of those people now, and hopefully with the way that the current property environment is, hopefully many people can still see it as an achievable target as well to own your own home, but. There's obviously the desire for independence as well. If you own your own home, you can paint the walls any color you like. You can hang the pictures wherever you like it, right? As a landlord myself, I encourage my tenants to do that as well because it makes them feel like their own home. But when it's your own home, you can do things without asking, right?
True.
And then obviously it comes down to financial benefits as well. I mean, if you're able to own your own home and build or create equity to leverage at some point, which we'll probably, discuss and touch on later on in the conversation. You can invest with your own home. So there's many things that too, and there's also it's supported by the government as well. So there's incentives for tax benefits as well if you're trying to invest in property. But it is supported by the government. So but the long and short of it, in my opinion, I think it comes down to our sort of deep cultural and historical roots around.
And there is a security factor, I think, too, isn't there? That it's less likely that you can be kicked out or taken away. And
absolutely, yeah. There's. I mean, I've been a tenant for many years before, and although you felt pretty secure, there's always in the back of your mind, my landlord can. Ask me to leave. Yeah, exactly right. I mean, there's obviously legislations that protect tenants, but you know what I mean. It's always in the back of your mind as well. When's my time up here? So
yeah, for sure. I remember when I was in primary school, I'm sure food, shelter, clothing were the only three things on the things we need to have. I think that list I've heard is extended to about 18 things now. Wi-Fi apparently is one of them. So
Wi-Fi.
Can't live without Wi-Fi.
Absolutely.
Facebook, whatever.
Exactly.
Whole new world. So where does Australia sit in the global scale? Are we an expensive market? Is it affordable? You hear young ones now going, look, I don't think I can ever afford a property after the recent boom we've had. So where are we sitting?
Yeah, good question. Comparatively, I mean, if you're comparing, the likes of Sydney and Melbourne or all of our capitals to the US, right? I mean, we're pretty comparable, so to speak. But when you start to look at the likes of, London, Hong Kong, I guess even New York as well, those really high value cities, we do look affordable on that scale compared to them. But I guess at the end of the day, it really just depends what we're sort of comparing it to. I mean, our regional cities are quite affordable compared to a lot of other countries. But on a global scale, it all depends on what you determine is affordable as well, right? I mean, there's probably other factors that come into it, to like, what's your income, and I mean, the Australian property market is quite affordable for people offshore. I mean, if you look at the likes of China and certain Asian countries, that they're trying to park their money here because they see it as a good market and an affordable market as well. But look, long and short of it, on the scale, on the global scale, we are affordable compared to a lot of major capitals.
I suppose that's the catchphrase, isn't it? Compared to what? Are we affordable? So
yeah. It's what are you comparing it to, right?
Yeah. So Australia's a fairly young country on the global stage. I mean, we've really only got a little over 200 years worth of history compared to, some nations that go back for thousands of years. So often we hear that, the property market, it's cyclical, it runs in cycles, it goes up, it goes down. Is that true? And, how long can we base the research on when we are so young, really?
Yeah, so look, the property market does run in cycles, right? The short answer to it is it does. How these cycles are measured, it really depends on when you're measuring to sort of identify a cycle as well. And, we've done many webinars and education sessions on the cycle because we really like the fundamentals of the cycle. I mean, there's many economists out there that write about cycles. I think you may have even heard me mention before in other conversations we've had. There's an Australian economist by the name of Phil Anderson. He talks about the cycle that's been identified over the last 200 years, right? So, and when you start to really look at that, you can see there's a trend that it has followed for 200 years, right? So, but if you start to condense that and break it down to go, okay, well, we know we're not on the 200-year cycle, so to speak. If you break it down, you can start to see that there's about an 18-year cycle, right? And how that cycle is compiled is there's a recovery phase, which lasts between 6 to 7 years. There's a mid-cycle dip or a mid-cycle correction after the recovery phase, which lasts 1 to 2 years. Then there's an explosive phase of the cycle where, the market does extremely well in certain areas and locations, and that lasts between 6 to 7 years. And then after that explosive phase, we see the peak, right? And then we see the trend of the market start to come back down, which is like a growth slowdown phase, and that lasts between 2 to 3 years. But when you start to condense all of that, that really sort of lasts for a sort of circa 18.6 year cycle. So there's, I think, to be honest as well, man, it really depends on who you ask and who you talk to as well. But a lot more economists are commenting on cycles. And the Australian property cycle isn't as easy as just going to the property clock. I mean, have you heard of the property clock before?
Yep.
Right. There's people that talk about the property clock, and you can go say, okay, well, where's the city? Where's the city on the clock at the moment? Should I be looking at that city or that location? But those clocks, they never bring in any factors like GFCs. They didn't have a pandemic on there, you know what I mean? So there's you can't really go to the clock to say, okay, well, I'm going to base all my decisions on if it's a good time to buy property in certain locations on the clock. You've really got to start to go down and delve further into the actual cycle itself.
So if you're looking at a cycle and it sort of goes up for a bit and then has a bit of a crash or plateaus and goes up again, does that mean, you can go back to a cycle and go, right, well, this is a good time to buy? Like, I suppose when you look at a share market chart, you can see it sort of goes up for 7 or 8 years, comes back down, corrects. Is there then a timing factor you can play off and say, timing with the share market, people who, try to be bottom pickers get smelly fingers. Is it that kind of thing with property as well? Or can you go, right, this is where the cycle is, I'm jumping in now?
Yes, similar. So you can certainly identify where we sit in the cycle today, right? That's pretty easy to do. Now, I don't encourage people to try and time the market, so to speak, particularly for a beginner investor. I mean, you've got to get in at some point. Yeah, do your due diligence and try and work out where we are in the cycle if you really need to. But I can sort of explain why we delve into the cycle when we're sort of identifying locations. Now, again, it's probably another hour conversation here, but when you start to look at the recovery phases, the explosive phases, the mid-cycle dips, the downturns, you can start to see, and it's very, very clear, that certain cities perform differently compared to others through different phases of the cycle, right? So an example of that, through a recovery phase, you can always see, and it's very clear, that the likes of Sydney and Melbourne have always taken the lion's share of capital growth through that recovery phase, right? When you look at explosive phases, it's extremely clear that the second tier cities have typically taken the lion's share for growth through the explosive phases, right? So for us as a company doing what we do, identifying or understanding where we're at in the cycle is crucial for us to basically say, okay, well, we should be focusing on these areas based on historic market data. Again, you know, it's not speculation, and nobody really knows the future, right? But when you go, okay, well, over the last 200 years, you can see that the cycle has run true. You're pretty confident that it's going to continue to do what it's going to do, hopefully maybe for the next 200 as well.
So we
Does
often hear
sense?
that, long answer, but got there in the end. We often hear with property, it's, you know, all about location, location, location.
Yeah.
So that's obviously one thing that impacts property prices. What are some other things that need to be considered when we're looking for property?
So what influences the market and pricing?
Yeah, pricing.
Yes. There's, again, a myriad of things here. And this is where it's, you know, it's harder to time the market, so to speak. So a few factors. A big one is supply and demand, right? With anything, you know, the more supply there is, the less demand there is, so to speak. But, you know, if there's more demand and less supply, that increases pricing, right? So that's a big one there. Obviously, a topic on everybody's lips at the moment is interest rates. That certainly influences, but that more influences sentiment as well. I mean, it certainly impacts and influences people's position to borrow. We're certainly not denying that, but there's overall economic factors as well. You know, what's the economy doing in the Australian property market? I mean, that's a big factor there. Location and amenities as well, that impacts property pricing. So depending on where you're looking, government policies as well. So if government policies change, that can make the investors, or particularly investors, go, you know, I might sit on the bench at the moment. I might wait to see what that happens. You know, investor activity as well. If investors are really starting to slow down, you know, you can start to see the sentiment has shifted. But owner-occupier activity as well, because typically owner-occupiers, they're the buyers who really put that upward pressure on the property market in certain locations, and rental market as well. So demand for rentals. So there's many things that influence property pricing, but that's just a few.
Yeah. So I've had clients say to me in the past, you know, when you're talking about a diversified portfolio and you mentioned shares and they, you know, like, never invest in shares. I know someone who lost so much in the last crash and they, you know, went to cash and they never recovered. But property always goes up. So I'm going to stick with property. What do you say to people who believe that?
Yeah, look, if you're asking, does property always increase in value? The short answer is you have to say, no, it doesn't always increase, right? But it also depends on when you're measuring it as well, right? So, you know, very simply, you go back to the GFC, right? So around that sort of 2008 mark. If you asked anybody if property was increasing then, what do you think they would have said?
Well, I just ran a little thing on mine, my investment property, and yeah, I picked it up for nearly 50,000 less than its GFC price when I was just looking at its history today. So I know, you know, for a fact, it doesn't always go up.
Yeah. So it doesn't always go up in certain times, right? But that's okay. Yeah. As property investors, I think you need to understand that. But if you go back again to the GFC and like you, I mean, you bought, let's say you bought at the start of the GFC, your property would have taken a big dip. Okay, so would have lost money. If you still hold that property today, you've pretty much doubled the value of it, right? So the question is, did property go up? It did, right? So it just depends on when you measure it. But I think again, for investors and anybody really holding property as an asset, you have to. I mean, there's ways to make money short term through real estate. However, general rule of thumb, you've got to think long term here. And again, if you go back to this cycle and you really start to understand the trends, you will see that property pretty much always increases, right? But
over the long term.
over the long term. Yes.
So are there some tips and traps then for people? Because obviously, if someone was forced to sell when their property's gone down, that's a lousy outcome. Like, people who sell their shares when the markets have gone down, they're not going to be winners. They're going to get that bad taste in their mouth. They're going to moan and groan for years about how they were hard done by being forced to sell out. So are there tips and traps for investors, even homeowners, that they can avoid being forced to sell at a bad time? What are some good ideas if you're going to be a property investor?
Absolutely, yeah. So look, just on the comment around people being forced to sell. If you're forced to sell, look, it's okay to sell an asset, right? I mean, if they've just bought the asset and they're forced to sell, the question would be, should they have bought that in the first place, right? I mean, but if they've held this property over 10, 20 years and they're forced to sell, they're probably going to make some profit anyway. Okay, so look, I guess if you start to go into any sort of tips here, and even the traps as well, I guess the first tip is set clear goals for yourself, right? I mean, are you an owner-occupier? Are you an investor? Have a definitive objective here. And for the people who don't know how to set those goals, this is where, we'd always encourage to engage professionals that can help you do that as well. Okay. Researching the market is a big one. Many people don't know how to do it, or many people think researching the market is going to realestate.com to see what that property sold for in the same street 6 months ago, and trying to find comparables that way, right? That is the entry-level research, right? So there's so many other factors that you've got to consider there. Identify location, understanding what's happening in that location. That goes with research as well. More tips, diversify the portfolio as well. So I guess if you are continuing to invest in real estate, so to speak, don't put all the eggs in one basket into one particular asset type in one location. Spread the risk, or spread the locations there. Even going to shares or other sort of assets as well. But a big one here, I think, if you sort of condense all of those and put them into one, seek professional advice, right? Because there's many professionals out there that could probably guide you in each one of those. Even if that professional can't do all of them, there's other professionals that can help you as well, right? And there's many professionals, or most professionals, I should say, they've got networks of people that can help you as well. So don't be afraid to engage professionals for that guidance. Traps, right? So this probably goes back to the comment before. I mean, over leveraging, right? So I think you and I had a recent conversation around people borrowing. I guess part of our contingency for the buyers that we work with is we say don't max yourself out, right? You know what I mean? If you've got $1 million to spend, don't go and spend $1 million, right? Let's just try and wind that back a bit there. If you're an investor, right, this is particularly for investors, try to avoid the emotional decision making, right? So try to really understand the numbers behind the purchase or behind the strategy. As an owner-occupier, it's hard to do that because there's a lot of emotion for that purchase, right? It has to be the right home. It has to be the right location, right street, right aspect, right everything, right? The taps have to be the right colour. So
going through all that at the moment.
It's tough, right?
So completely understand.
Yeah, but if we're talking about investment here, try not to think like that. Try to keep that business mind about it. Don't ignore hidden costs, right? So get a really clear understanding on what the costs are to hold an asset or to hold a property. There's many holding fees that you probably need to be aware of, right? And again, this is where professionals can sit down with you and take you through a cash flow to show you the ins and outs. Lack of due diligence as well for people. They just jump into something that they find, that they see, that they like the color of straight away. So if you haven't done your due diligence on that particular property or even financial product, that can bring people unstuck. And obviously the other one is, which we can't really sort of control really, is market volatility, right? So markets fluctuate. So everybody wants to buy low and sell high, so to speak. But and that's where it comes down to people trying to time the market. But you've got to understand, if you're buying a property, whether it's owner occupier or investment, the pricing is going to go up and down, right? So I think if you understand it going into it and aim for the long term, you're going to be okay.
Perfect. So there's geographic, spreads we can do. You talked about the different sectors. So I guess there's, everything from residential, commercial, industrial. There's so many different things to look at. So yeah, definitely, a space that most of us aren't familiar with. So the professional can help.
Right.
Now, Astute Property.
Sorry, I was just about to say the other one that I probably should factor in there, just for the investor here, is you want the property to be managed by a professional as well. So poor property management can hinder your experience.
Yes, and that's another one of those fees you're talking about holding. I suppose there's not just your rates and your water. There's there could be body corp, there could be ongoing leasehold fees, or
absolutely,
yes. there is a lot to consider. Real estate fees that take money out of the rent as well to manage the property for you. So very good idea to make sure you've got all that covered, because people go, oh, your tenants just cover that for you, and you're like, well, not always. So interest on the loans, there's lots to consider.
You've got the landlord that wants to save $20 a week to manage the property themselves, but it's a minefield. That's what a cost that we would absolutely recommend paying, because they're managing.
Well, it's an investment, isn't it?
Absolutely,
it's an investment, not a cost. Yeah, it's how you look at it.
Yeah.
So. You've been in sort of relationships with property developments before, and you've moved into what we call the buyer's agent space. So most people are like, why would I spend money on someone trying to find a property for me? It's ridiculous. I know what I'm looking for. I can jump online and do it myself. Why should I pay a buyer's agent? So what are the pros and cons of using a professional? Apart from I'm just time poor and don't have time to look, I'll just outsource it. What are some other reasons for using a buyer's agent rather than DIY?
Absolutely. So the buyer's agency space in Australia is still a very infant industry, right? Compared to the likes of the US, where everybody uses a buyer's agent, right? It's very common for somebody selling the property to obviously engage an agent, which is still very common here. But it's very common in the US to have a buyer's agent buy the property for you as well, right? So it's an emerging space in the end industry here, which is good to see. A few figures and stats here for you, which is obviously a reason that we made that transition, is there's 140,000 registered real estate companies in this country, right?
Wow.
Now, out of that, there's circa 300 or so thousand real estate agents, right, who are selling properties. Okay. Now, out of the 120,000 offices or thereabouts, there's only 3,000 buyers agents. Okay, so that are representing buyers. So you can see that buyers are grossly underrepresented at the moment. All right. Now, I guess the pros and cons here for this space is, if you're engaging a buyer's agent, they can give you that expert guidance, right? So, so they understand markets, they understand how to price properties, they understand the fundamentals around investing as well. I mean, there's many different buyer's agents that specialize in different things as well. So there's investment buyer's agents, there's buyer's agents that you probably want to engage for your owner occupier as well. There's commercial buyer's agents. So there's many that have their own specialties, right? A buyer's agent normally has access to listings that you won't find yourself on the likes of realestate.com or Domain or those online platforms. So they do get access to the off-market stuff prior to hitting market. So a lot of people see value in that as well, which eliminates a lot of the competition. Many buyer's agents would have exceptional negotiation skills as well. So, that helps with obviously negotiating the price of the property, the terms that you're looking for, and negotiating the best outcome for the buyer. Networks and connections. So that comes down to obviously having those networks where you do get access to the stuff that the general public may not get access to. So, and it's obviously taking away the angst, the time that you need to spend to go and do this yourself as well. So a lot of people are starting to see value in it there. Obviously, if you want to put it to cons as well, things to consider if you're using a buyer's agent, there's a cost involved to it, right? So there's a fee for service here. Now, depending on services rendered, many different buyer's agents will have different structures. Okay, some work on percentage of purchase price, some work on flat fee models, some may be a mixture of both, depending on what you're trying to do. But there's a fee for the service, right? Now, I guess if you're engaging somebody to go and do this for you, they pretty much take control of majority of this, right? So I'd want to say the buyers, although are the decision makers, they may have limited control as well, because you're engaging somebody to go and do all the work you can't and probably don't know how to do it either, right? So I don't want to say you lose control as the buyer, but you would have limited control in some respect there. Different buyers agents will have different, they'll have different experiences, right? Now, as I mentioned before, this is an emerging industry, so there's a lot of new buyers agents coming into the market at the moment, which, to be honest, I think is good, because we need more representation there. With the new guys coming to market, they may have less experience than the more experienced guys, right? So I think if you're engaging a buyer's agent, try and find somebody with experience and a track record. Okay, and I'm not saying don't give the new guys a crack or a shot, but if you're a bit more risk adverse and want more, I don't want to say to take away from the new guys, but professional guidance and experience, engage somebody who is well experienced in that space there. And the other thing as well is the agent or the buyer's agent availability. So most buyer's agents will get to a point where they're working with a certain number of purchasers or clientele, and then they'll cap it for the month, right? So this is what we do. If we're working for a certain amount of buyers, we don't want to bring on too many where we can't service, because we know our service will drop, right? So try and work with an agency that is that sort of mid-range agency. I mean, if you go with a big buyer's agent firm, you may be treated as a number. If you go with the small guys, they may, provide a bit more service in that space there. So, but again, it all depends on what you're comfortable with as a buyer as well.
For sure. Good tips there.
Yeah.
So we used to hear the words bandied out around, especially pre the global recession, about a property bubble. And we heard a lot about Americans being able to just, throw the house keys back to the banks and walk away. I know we don't have those, no recourse loans in Australia, so it's a bit different. But when we're talking about a property bubble, how would we know if we were in one?
Yeah, so typically, it's a really good question, right? So typically the way a bubble operates, or the way to sort of the telling signs of a bubble, one is rapidly increasing prices, okay? Have we seen rapidly increasing prices over the last couple of years? Yeah, we did it at one point, right? It was rapidly increasing. The other thing is speculative activity. I need to get that out. So, where it's just all speculation, people just jumping in the market, paying absolutely anything for a property, trying to flip it for a profit in 2 months' time, right? So there's a lot more of that activity there. Easy credit availability. Okay, so we saw that a couple of years ago, but the easy credit availability now is certainly not the case, right? It's really hard to get credit. And we know why it was easy to get credit a couple of years ago, because the governments and the RBA, they had to pull that lever to stimulate the economy in the market, which is what it's gone and done, right? But we don't have easy credit availability. Credit availability at the moment. So that's a good thing. Overbuilding and oversupply. We're certainly not oversupplied, right? If you start to look at the stats and the factors around the building industry, I mean, I did a webinar with you not so long ago talking about the building industry. That's still in a lot of pain. Okay, so the overbuilding is not happening. If anything, we need more builders and we need more things being built, and we're certainly not in. We don't have oversupply. All right, we are massively undersupplied in housing at the moment. All right, market sentiment and media hype. So The market sentiment at the moment has certainly changed over the last couple of years. I think people are a lot more cautious, cautiously optimistic, I should say. But the sentiment isn't off the Richter scale and off the charts, and everyone's like, you can't lose if you buy property, right? So that's not there. Market volatility as well. So and unsustainable growth. So we're not the market. Yes, is always volatile, but we're not seeing unsustainable growth either, right? And the big one here is probably a disconnect from economic fundamentals that I've listed. So property typically rises when the economy and income growth and all that is great, right? Because people can go and buy property. But again, they're trying to stem that at the moment. But there are a few factors there that really indicate if we're in a bubble. And majority of those are indicating that we're not in a bubble at the moment.
Good to know. Good to know. But we are in a very high inflation time period at the moment. And obviously we're seeing the interest rates go up and up and up, which are causing pain. What role does inflation and the interest rates play in the property market? I'm guessing if there's pain, it's going to be harder. So how does that play out?
Yeah, it certainly makes people think. I think this is what the RBA are really doing, and they've set out to do, is to get people to think about their spending, right? Because we need inflation to come down for them to feel comfortable, right? Which is fine. The only lever that we typically pull here in Australia is rates, right? So there's probably other levers that we could probably explore, but I'm not sitting in office making those decisions. So
and you're not on the board of the RBA either. No one's going to listen to you.
Wouldn't want to be there at the moment. Imagine old Phil walking down the street going to get some milk down the shops. He'd be getting the spray. Wouldn't he?
Couldn't pay you enough.
No. So, but look, in regards to rates, how does it impact markets and stuff? I guess, mortgage affordability is a big one. So what we are seeing is we're seeing borrowing capacities drop significantly, right? So, working with buyers, let's call it 2 years ago, who had $1.5, $2 million, that's now almost down to the $1 million or under mark, right? So so that obviously then influences what they can and can't buy. Rates will obviously influence investor behaviour as well, because it's harder to get money. It's harder to find the yields that are offsetting the cost to hold that asset, right? So with the environment that we're in at the moment, and if you're a property investor, it's likely that you've got out-of-pocket expenses, right? It's really, really hard and difficult to find neutrally or positively cash flowed or geared properties at the moment with the environment that we're in, right? So, but if you know that you're going into the purchase and it's going to cost you $100, $200, $300 a week, $500 a week, whatever it is to hold it, that's probably going to influence, do you do it now, or actually what am I going to go and buy, right? People are refinancing their existing mortgages as well. So the rate changes, people have had to refinance. But inflation, how that impacts the market is obviously property values, right? So it'll cause property to go up and down. It's not the only thing that causes property to go up and down, but it will certainly cause property to go up and down there. Rent increases is a big one, huge thing at the moment. I guess if you look at the pros to the rent increases as a landlord, yes, your rates have gone up, right, which is obviously impacting sentiment. And impacting cost of living, but your rents have gone up as well, like significantly as well. They haven't gone up enough to offset all the interest rate rises, but they have gone up enough to still make the property affordable. So that's how inflation is impacting that there. Inflation impacts financing and affordability as well, which is sort of all rolled into that. But like rates and inflation certainly impacts the market, but it all comes down to sentiment as well. And sentiment really sort of drives people's decisions to either buy or not to buy.
Perfect. Well, thanks, Alex. We've sort of covered so much, such wide roaming topics in the property space there. I do have one final question for you. So for people who are wanting to use this opportunity now to crack into the market as a first time, whether they're an owner or an investor, do you have any final parting words or advice for people looking in that space?
Yeah, so if you're looking to enter, whether owner-occupier or an investor, and I've just got some things written down here for. So just forgive me for reading them out because I think that they're good to sort of really touch on. So again, we mentioned before is define your goals here. So get a really clear understanding around what it is that you're trying to achieve with the investment. If it's an owner-occupier purchase, it's obviously to house your family or to, buy your dream home or to buy your first property, right? You need to establish a budget as well. So, and this is where it comes into working with mortgage brokers, working with financial professionals. They'll be able to establish what you can and can't spend, right? And then again, we touched on it before, maybe don't go and max yourself out, right? So keep a little bit of wiggle room in there just in case for a rainy day. Research the market as well. Okay, so if you're confident enough to go and research the market, and I suggest you don't just sit on realestate.com and think you're researching. There's many platforms that delve a lot further into data. So if you can research the market, go and research the market. If you don't know how to engage a professional to help you there, get a pre-approval as well. So many agents want to know if you've got a pre-approval, if you're going to go in and start to negotiate a price. So go and get that sorted. Consult with professionals, as we mentioned. Start small. I think, again, if you're just stepping into the market for the first time, it doesn't have to be the biggest property in the best location, right? So start small. It's the first step to getting in there. Consider long-term as well. As mentioned, if this is an investment, try and have that sort of 10-year plus view or plan here, right? Because we know market is volatile. It's going to go up and down in that 10 years. But if you have that 10-year vision, then you're going to be okay. Conduct the due diligence on the professionals that you're working with as well is a big one. Plan for additional costs. So as mentioned before, just keep a bit of fatten it for a bit of wiggle room if you need to pay for anything else that wasn't foreseen there. And the last one I've written here is be patient and don't rush, right? So just because you've just been approved for a loan and you've just started talking about it, it may take you 3 months, it may take you 6 months, it may take you a year, but it has to be right? So don't rush the process.
Good tips. Thank you so much for joining me, Alex. Really appreciate your insights.
No worries, Amanda.